Hey, with all the craziness in the market right now about interest rates rising, the last thing you want to do is buy in a location which is already super expensive. If something's overpriced and all of a sudden people can't afford it anymore, that's where it's going to start to go down in value. You might have seen another video of ours that talks about the 7 ingredients to a healthy property market, where effectively you make yourself bulletproof for what's going on in the world. COVID, GFC, interest rate rises, whatever. What I'm showing you now, there's not one Australian property market. You can appreciate there's thousands of little micro markets in the Australian sort of geography there. But what you can see here, sunny coast, areas of Newcastle and surrounds, and some selected areas of Melbourne, not right near the city because that's very expensive. That sort of goes to my first point. But if you are looking to pull the trigger on your ADF housing entitlements, or maybe buy an investment property so you can have that sort of sustained and low risk capital growth, if you're opposed to the RAF base Amberley or Enoggera here in Brizzy or southeast Queensland, it's a no-brainer. You should be trying to pull the trigger on your ADF housing entitlements. Same with RAF base Williamtown and Singleton in that sort of Newcastle Hunter region. There's a cracking, property market down there. And like I said, some select areas of Melbourne, even Puckapunyal. So the very northern fringes of Melbourne right now are a 35, 40-minute drive to Pucka. They're all going up in value because I've got those awesome master plan communities. So there are some good areas down in Melbourne. As a bit of a pro tip, this is what you should be looking for, especially when interest rates are going up a little bit. Do not pay too much for something. For instance, what you can get here in southeast Queensland for $650,000 is over $1 million down in Sydney and Canberra. Why would you do that? Why would you overpay? You want to go to somewhere where you got really good rental yields. So if you got more money going out the door, you want to have more money coming in the door from a rental yield perspective. And of course, the key to you guys being able to sustain a really healthy property portfolio is make sure these properties are going up in value, otherwise you're going nowhere.